Well, good morning. It's me, Kenny Bolker, your host of the party. And look at the day outside today. All these clouds that are brewing up above. It looks a little bit gray as you look out into the ocean. So I wonder if that says anything about the day that we're going to have today. But today is Thursday, July 27, 2023. And here are the things that you need to know. Okay, so now that we know what the Fed is going to do, he left the door open. Rates are sure to rise again, although some will tell you no. I'm still in the camp that it's yes. Meta, he wows the street, right? Cult members take the stock up 8% in the pre-market trading this morning. 81% of reported companies that have reported so far have beat. Of course, it's across a lower bar, but who seems to care? And 50 more companies are reporting today. The dollar is weaker, gold and oil are higher as a result. And what do we have for dinner tonight? We're going to try the Perciatelli in a lemon, butter, and toasted sesame seed sauce. It is simple, it takes 10 minutes, and it's a great summer dish. Okay, so here's a quote from Jay Powell yesterday. It is certainly possible that we would raise in September if the data warranted. And it's also possible that we would hold rates steady in September if the data warranted, right? So there it is. He left the door wide open. Maybe yes, maybe no. We're not really sure, but the consensus is for another rate hike, right? So is there anything else to say? Not so much. After the Fed raised rates for the 11th time since they started raising them back in the winter of 2022. The terminal rate is now at 5.25%, 5.5%, and the economy remains strong. The job market remains strong. Wage pressures remain strong, and risk appetite is off the charts. And ultimately, that's an issue for JJ and the Fed, because what they want to see is all of that weakening, right? And since it's not weakening yet, JJ left the door wide open to the possibility of another, if not more, rate hikes in the future. The sense is that it's 5.5%, 5.75 is the sweet spot, while others are still pointing to 5.75 and 6% as the final level. Well, we'll have plenty of time to figure it out. There's a lot of economic data due out over the next 8 weeks ahead of the next Fed meeting, which is not until September 19th and 20th. So don't stress. There's going to be plenty of time to consider. Now, what did stocks do? Well, the Dow rose 82 points, or 0.2%. The Russell rose 14 points, or 0.7%. And the Dow Transports gained 441 points, or a whopping 2.75%. Transports led by ODFL, which was up 6.5%. Better earnings, better cost controls, and a $3 billion buyback, all contributing. UMP was up 10.4%. FedEx was up 3.2%. Ryder up 7.4%. These four names added 380 points, or 86% of the gain yesterday. Now, the S&P gave up 1 point, which is nothing, and the NASDAQ lost 17 points, or 1/10, on what many viewed as a boring day. This after we heard from both Microsoft and Google, and we awaited word from Meta, which came after the bell. And guess what? Marky Mark managed to wow them again. Second quarter sales smashed the estimates. Forward guidance was rosy, and the advertisers are moving to the new Reels platform, competing directly with TikTok. Meta closed up 1.4% on the day, and it's up 148% year to date. And after that report, Meta cult members are taking the stock up another 8% in the pre-market trade this morning. Remember, Marky Mark started the year by telling us that it was going to be the year of efficiency, becoming a stronger tech company and slashing costs, and that seems to be working out. They slashed thousands of jobs and are investing heavily in artificial intelligence and virtual reality. Right? Remember, Meta sold off 9% in the past week ahead of this announcement. So the move this morning just retakes those losses, but you can't argue. It's still up 148% year to date, so not so bad. 152 of the S&P companies have reported, and like I've been saying, many of them, 81%, have beaten on both the top and the bottom lines and have offered up better forward guidance in addition to raising dividends and increasing stock buyback plans. But don't forget, the bar was low this quarter, which is why so many have beaten. The usual beat rate is typically between 72 and 75%, and those beats span the sectors. So it's not just one sector any longer that's carrying the markets higher. The rally, which started out with artificial intelligence and mega tech, has now broadened out to energy, healthcare, financials, mid-caps, small caps, value, and growth. All those names now getting thrown in the mix. The best performer yesterday was communications, XLC. That was up 1.5%, right? Google was up 6% and expected to be an outperformer again today after the Meta news, right? Meta is 25% of that ETF. Google is 22% of that ETF. So 47% of the performance is tied to just two stocks, right? And at 6 o'clock this morning, Meta was trading up 8% and Google was trading up another 1%. Industrials, XLI was the next best performer, up 0.7%, followed by financials, XLF up 0.6. We saw weakness in tech. The XLK was down 1.3%, and basic materials was down 0.3%. Away from those top 11 sectors, you had retail, which rose 1.5%, airlines, right, up 1.2%, disruptive tech was up 2%, aerospace and defense was up 1.5%, semis lost 1.5%, and the list goes on. You can go through all of them to see. But overall, it was really a relatively quiet day as we prepared for the Fed. Eco data today includes the first release of second quarter GDP, expected to be at plus 1.8%. Durable goods of plus 1.3%. Capital goods ordered and capital goods shipped of negative 0.1 and plus 0.2 respectively. Pending home sales down 0.5, or actually a half a percent. And finally, Kansas City Fed survey at negative 10. In addition, we're going to get the weekly initial jobless claims and continuing claims, right? So nothing really new there. Earnings, it is going to be a big day. We're going to get nearly 50 companies reporting: CBRE, KBR, AbbVie, BTU, AEP, Bristol Myers, Hershey, New York Community Bank, Lazard, Royal Caribbean, McDonald's, Southwest Airlines, Honeywell, and Comcast. And after the bell, we're going to get Ford, T-Mobile, and Mondelez. So it's a broad showing. Sectors representing real estate, IT services, large pharma, energy, utilities, commercial and residential building equipment, packaged foods, small and local banks, autos, motorbikes, institutional brokerage, cruise lines, restaurants, airlines, and diversified industrials, along with cable and satellite and cellular. So today's going to be an interesting day. There's going to be lots to discover. There's going to be lots of news across a range of industries. U.S. futures are up this morning. Dow's up 58. The S&Ps were up 27. The NASDAQ was up 200. And the Russell was up 6 as the earnings party continues. Expect to hear all kinds of commentary about what JJ really said yesterday and what he meant versus what investors think they heard, and where the Fed is headed, why the Fed is headed there, and all that stuff. Also expect so many analysts to dissect the latest Meta results and what it means for market. And, by the way, the world. In addition to all the earnings reports that are going to hit the tape between now and 10 o'clock this morning, and then soon after the bell. European markets this morning were all higher, up anywhere from 0.3 with the UK, up to 1.4%, which is the Euro stock, right? So the broad continent. Investors across the continent are awaiting today's ECB announcement, where it's expected that they're going to hike rates by 25 basis points, taking their terminal rate to 3.75%, which signals to hike again in September. Inflation across the countries in the zone are at varying stages, some more successful than others in controlling it. The latest Eurozone data points also suggest that business activity is shrinking faster than expected, and that's something that Christine Lagarde will surely point out. Treasury yields yesterday fell after the announcement. The 2-year yielding 4.84. That was down from 4.86, and the 10-year was yielding 3.86, down from 3.89. The shorter duration bills are still yielding a little bit better than 5.4%. The dollar index fell after yesterday's announcement, right, as it's assumed that the Fed will not hike rates any longer, a position I do not agree with. This morning it's trading at 100.58. That's down from 101.14 yesterday. Gold shot higher on that move, and it's trading at 2020 after trading in the 2011-2022 range. Oil continues to trade 78.80 range. This morning it's trading at 79.5 after trading as high as 79.80 overnight. The S&P ended the day yesterday at 45.66, down just 1 point, not a big deal. Yesterday I said it felt a bit tight, and that's what we saw. The S&P did nothing really. It just churned, right? But this morning it's going to get a charge out of Meta and the list of S&P companies that are due to report. Traders and investors are no longer concerned about what the Fed will do. They know what they're going to do, and they don't have to revisit it now until at least the Jackson Hole boondoggle, which is in 4 weeks, but the next Fed meeting is really in 8 weeks. The S&P is now 5% 1% above trendline support at 43.50, and it has not tested trendline support since May. And while it feels real good, don't get lulled into this sense of never never land, because never never land does not exist. At some point, investors are going to recognize that this is way stretched and it needs to take a breather, and it will. But that will give the long-term investor a gift, right? You should not be chasing these names that are really running away. Sit back, you own them, let them run, be happy with it. There are plenty of other options and opportunities that will balance out and stabilize your portfolio in the longer term. Patience is a virtue, and investing is a long game. And while we can't see what the catalyst is going to be right now to cause the market to pull back, it is out there. But in the meantime, look for opportunities in the underperformers that just aren't sexy enough but have strong fundamentals. I really want someone to shake the branches to see who falls out. Okay, so what are we having for dinner tonight? This is a great summer dish. It's simple, it's easy, doesn't take a whole lot, but once you'll have it, it will soon become a family favorite, right? It's just a Perciatelli, which is a thicker spaghetti, right? It's a spaghetti, it's just thicker. And it's just in a lemon, butter, and toasted sesame seed sauce, dressed with some fresh grated Parmigiano cheese. It's simple, it takes you really all of 10 minutes to make, as long as it takes you to boil the pasta. So bring a pot of salted water to a rolling boil. Now add the Perciatelli, right? At this point, in a large saute pan, you want to slowly melt, maybe 1.5 or 2 sticks of butter, depending on how much pasta you're using, right? But melt it slowly because you don't want to burn the butter. Once it's melted, you're going to add some fresh lemon juice. So take the lemon, add fresh lemon juice, stirring it as you add. Taste as you go, because you don't want it to be overpowering, right? You can always add more lemon, you just can't take it away. You want it just to be kind of a hint, and it reminds you of summer. Now, in a separate pan, you have toasted your sesame seeds. Don't burn them. Just put them in the frying pan, turn the heat up, and just toast them. Set them aside. Once the pasta is done, you want to take the pasta out with tongs, put it directly into the butter lemon sauce, toss it so that you coat all the pasta. Add 2 nice handfuls of grated either Parmigiano or Pecorino Romano cheese, maybe a combination of both, and then add the toasted sesame seeds on top. Toast, toss, and then serve it immediately. It is honestly, it's a great summer dish, and when you're really not in the mood to cook, but you want something good and something fresh, this will do the trick. In any event, look at this. The wind is picking up. You can probably hear it in the background. The clouds are kind of brewing over my head. So let's see what this says about not only the day today, but how the market's going to perform. Until tomorrow, take good care.